Hashtag RIP Twitter was trending this weekend on Twitter. Its tumbling shares, management departures have people looking really for any ray of light out of its earnings call when it reports after the bell later today. So joining us now is Scott Kessler, head of tech equity research at S&P Global Market Intelligence. Scott, thanks for joining us today.
Thanks a lot, Morgan.
So you're seeing a pretty good growth story here. What are Twitter watchers missing?
Well, look, I think a lot of people that follow the company, frankly, are trying to bury the company and the stock. And we're hopeful that something like that won't happen anytime soon. And you referenced the growth story that we see, and I think that's one of the kind of paradoxes right now for the company and the stock. On one hand, people think and talk about Twitter as a no-growth company. I've heard that repeatedly. And that's really a reference to the monthly active users, MAUs, where some people expect not only no growth this quarter, but perhaps a decline. Now, of course, that is important on some level, given that it is the singular metric that measures the number of users that people seem to key on. But as you referenced, we see healthy growth in revenues, for example. I think we're looking for in excess of 45% growth in the quarter, actually closer to 50%. The street is at $710 million in revenues expected for the quarter. And to be frank, we see that growth story continuing well into 2016 and beyond. So we think there's a disconnect, and we think there is opportunity associated with that.
Still, when you take a look at Twitter and when it reports results, those MAUs that you're referring to does seem to be the thing that drives the stock more than anything in terms of these results. But overall, you're saying that people are missing the bigger story here. Well, you also said that big bad thing that Twitter has always done is be more defensive than offensive. What do you mean by that? How can the company change things on that front?
Right. So I think what's happened over the last couple of quarters is that, frankly, Twitter has been giving explanations and arguably making excuses as to why they haven't done as well as maybe others and they would have liked. The reality now is that we think it's time for the company to come together. The leadership team with Jack Dorsey and Adam Bain at the kind of helm of the company really need to make their case as to why Twitter is here to stay, why Twitter is a platform to be reckoned with for the quarters and years to come, and perhaps most importantly for the purposes of this conversation, why the company and the stock are undervalued. It's a $10 billion company at this point. They have $4.5 billion in cash and investments as of the end of September, and we think there's a lot of financial flexibility and, yes, tremendous value in the company and the stock.
And certainly there's been growing speculation that Twitter could be a potential takeout target, but you just mentioned that cash pile. Should the company stop hoarding that cash and start spending it? What should Twitter do with this money?
Yeah, I think in short, absolutely, we would point to two things. Number one is with that amount of capital and financial flexibility, send a message to the investing public by announcing some type of stock repurchase, maybe an accelerated buyback plan, and basically commit to the fact that you are going to support the share price. Secondly, and kind of notably, is look, there's been a lot of carnage up and down the technology sector in the private markets and in the public markets over the last number of weeks. Why not deploy some of those assets to buy up some other maybe smaller technology companies that could enhance Twitter's offerings, technology, talent pool, and whatever else you can dream up? I think there are opportunities associated with where Twitter is right now in the world, particularly given its balance sheet.
So in light of all this and ahead of earnings after the bell today, where do you stand on the stock? I mean, shares are down, I think, 80% since their high in December of 2013.
Yeah, that was right around Christmas time, and it's been a decline ever since. Frankly, we are very, very surprised that we're sitting here right now talking about Twitter as a $15 stock. Right now, we have a strong buy opinion on the shares. We have a 12-month target price of $40 a share, and we think the sentiment is way too negative. Twitter, RIP Twitter, we don't think that the end is near for this company or the stock.
Great. Well, Scott Kessler, thanks for joining us and breaking down this earnings preview. Thank you for watching. I'm Morgan Brennan. Have a great day.
Hey YouTube fans, I'm Landon Downey from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.